Chipo, welcome. So shall we chat?
Yes, let's do that. Hi, everybody. I'm happy to see that we all survived the game last night. It was very close, wasn't it? I was calling home. I said to my mother-in-law, please prepare some Gaviscon for my father-in-law. That it was intense. The older generation just wasn't coping. Not you, Kumaran.
I'm hoping not. Eh?
But anyway, yeah, it was a good game, and happy to be here, everybody.
Yeah.
Yeah?
Yeah. Let's kick it off. I mean, yesterday Chipo and I had our fireside chat, and then we realized we probably should have taped it and again. But I'll kick it off with an initial question. I mean, so expectations of mobile banking apps. What's your views on whether they're meeting customer needs, expectations, and things like that? I've got a couple of strong views, but I'll let you come in first.
So I work for a bank. I have to say we're trying our best. But I do think that there definitely is room for improvement, and we must improve. And why do I say that? Because if you look at customer needs in terms of what they want, and two of the previous speakers have already alluded to some of that stuff. If you think about enhanced security, particularly as payments move into real-time payments, etc., we should be able to protect customer data and customer information. So I think that is really driving a lot of the mobile banking space. If you also look into personalization, hyper-personalization, we all want to log into an app, and ideally your banking app, and feel like it's a personal space, and yet you're part of a bigger ecosystem. So I think that is extremely important. That's driving a lot of the conversations or the decisions that are being made with regards to banking apps. The other one as well is around integration into third parties. So our banking lives, or our sort of the stuff that we do now, is beyond just the bank. So I want to seamlessly move across different platforms and do different things, and yet feel the security of my bank is behind me, and all the technology advancements, whether it's AI, machine learning, fraud detection, etc., are still available at my fingertips for me to be able to do the stuff that I need to do on a day-to-day basis.
Yeah, I agree with you. I'll be a lot more controversial. I do work for the banks, but I think all of them have to fire me together for it to work.
We've tried.
So the first part I want to say is I think there's a misunderstanding that banks are not adaptable.
Yeah.
Right? We've seen 3 industrial revolutions happen, right? Railways, electricity, computerization, and now we're in the data and hyperconnection space. Mm-hmm. For each of those two, the first 3 industrial revolutions, the banking sector fundamentally transformed. Mm-hmm. You could not compare banks before each of those industrial revolutions to what they were after. Banks financed the railways. Banks used General Electric was actually in a partnership with a bank, JP Morgan, to bring electricity to the world. And when computerization happened in South Africa, I can tell everyone around in this room that it was the banks that brought the first big computers into the country. So banks do adapt, right? That said, so the capability is there. That said, it worries me that we sometimes pass the burden of adoption across to the consumer. WhatsApp doesn't give you a manual, right? That expectation that the consumer must learn what we want them to do so that we can adopt them, and sometimes this belief that the consumer must catch up, I think is fundamentally flawed. It's not the consumer who needs to catch up, right? Facebook, WhatsApp can go across any domain, any territory, any political system, any language, any LSM, and they're adopted intuitively. So for me, I think the banks will learn it, right? We've seen it all happening. We've seen a lot of the presentations today talking about adaptation and transformation. I think the banks will do that. But it is a critical learning thing. It's no longer about T's and C's at the back of the account application form and things like that. You know, it's got to be more intuitive. Last comment I'll make is just on that, is that years ago, and this will show my age, it was about 2003, I was called in by a number of CEOs at the bank that I was in to look at the GSM threat. Right? It was terrifying. 2003, there's this protocol that goes out. It is slick. Does error correction, latency, it's got unbelievably modernized structures to it. On top of this, they did a franchise or an auction of licenses, so immediately 2,600 mobile network operator offices sprung up around the world. So there wasn't this path to competition, it was just like overnight. And so I told these CEOs, well, we're screwed. We are screwed. We've been working 50 years to get a single bank account number, and these guys have one number across the entire world. Right. Your cell phone is unique across the entire world. And guess what? The MNOs did nothing with that. The banks built unbelievable apps. The websites of the banks started evolving. I was shocked. Right? And so that led to this. Yes, banks are not simply static legacy systems. They're incredibly complex, adaptive machines.
Yeah, so you've touched on a couple of things, and I definitely do agree with you. I do think that, I guess, the question stems from just the context in which we find ourselves as financial services institutions today. And that's really the competition that we face. And yesterday, me and you spoke about neobanks and sort of what they do and how they do what they do. So I think in the context of all these things that are happening around us, and also the proliferation of so many technologies within financial services that we would have not naturally engaged with, is where this sort of question around adaptability, around how innovative banks are. But I definitely do agree with you. Banks, for me, are like government. They command a significant amount of resources. So if you want to get something done, you want to do it at scale, particularly if you're going to drive national agendas around financial inclusion, etc. So you definitely will want to use an organization that's established. Yes, it's not perfect. Yes, it's asset heavy, and there's so many other things. But what we've seen over the last 10 years in terms of digital innovation is that banks are catching up. So I always get asked the questions, will banks ever shut down and go away? And I say never. There is no government that will actually allow that to happen. And you look at it globally. But we will have a space for retailers, telcos, neobanks, financial service institutions. It's just the value chain looks fundamentally different because of the players that are involved. But banks are going to continue being an integral part of any socioeconomic development in any country at any given point in time.
That's such an important point you make. I mean, it's not just about the adaptation. It's about solving for the entire country, right? So government's responsibility is financial inclusion. Financial inclusion is 100% problem. It's not a target market problem, right? So yes, in a small little ecosystem, there are things that are more efficient than the banking system. But when you look at it at a national level, you go from LSM 1 to 10, and you go geographically across the country, I think, yeah, I agree with you entirely. I think you cannot get around the idea that you need to have a certain type of entity that takes public money, creates money, circulates this around, allocates credit, does risk management, and does this on the at the behest of government ultimately. Yeah. Yeah. I think it's an incredibly important point. So if we get into trends, right? So what do you think are the significant trends that are influencing and the development of banking applications, but this whole banking world that we're going to? We've seen two amazing presentations this morning, which have come from different perspectives, right? One comes from the technology product perspective, and the other came from the balance sheet optimization perspective. So putting you on the spot, what do you think are the trends influencing this development?
So there's a couple of them that come to mind. The first one being a mobile first and mobile only approach. And that speaks to the digital journeys that we all spoke about. And it's beyond digitizing manual processes. That is not even a ticket to the game anymore. that is something you have to do, and you have to get it right, and you have to do it in the shortest period of time. Right. Now we have to create mobile first and mobile only digital banking solutions, because effectively that is the world that we serve. The second one for me is really around AI and machine learning. And there's a whole lot of talk going on around it, but practically within the banking space, if you think about hyper-personalization, there's microcosms of minute communities that are so influential in terms of behavior and adoption. And you talk about whether it's, believe it or not, the days of TikTok, Twitter, Facebook, Instagram are actually gone. Now you've got a generation that's moving into smaller communities. So these town hall sessions that Twitter had and could tell the whole world what was going on, people are not buying that anymore, and we see it in geopolitics, etc. So now you've got a space where people are moving into these micro communities and yet still want to be part of the sort of this bigger world around them. So if you think about AI and hyper-personalization, I think that's important. Think about machine learning in fraud detection. So I want to be able to do all these amazing things through my banking app or a payments app, etc. But I want you to use the technology capabilities that are available to detect fraud. We've got social engineering that is happening at a scale second to none at this point in time. How do we use those technologies to scale payments, to scale digital transformation, but also to protect customers at the point when they actually need it, not after the fact? The third big one for me is embedded finance, whether it's open banking, open finance, embedded finance, etc. And there's multiple research studies around how big the embedded finance community actually is. But for me, that is that's going to drive a lot of what we see. So how we embed financial services capabilities across multiple platforms, particularly non-financial platforms, is also going to be extremely important. And then partnerships, right? Partnerships have become an extremely important part of what we do from a financial services industry, because we realize that the audiences that we're serving don't come to the banks for everything all the time anymore, right? So I need to be able to work with other banks where we typically would have been competitors. It's not just around clearing and settlement anymore and managing balance sheets, etc. But it's beyond that. It's collaborating around the experience, around how we make sure that the customer is involved, how we make sure the customer is appraised, how we make sure fees are transparent, etc. All those things are sort of the things that we have to deal with, and that gives birth to new business models.
Right. I love what you're saying. I mean, and I'm going to challenge you on something in a second, but the first piece was around, you spoke about this idea of the mobile phone and how important it is. The Indians, when they, in the journey to developing the UPI and what is now seen as one of the largest biometric systems, well, the largest biometric system in the world, had a policy trinity that they used. It was called the JAM trinity. Right? Jandan, Aadhaar, and mobile. Financial inclusion, biometric technology, and mobile. And what I loved about that was it was so absolutely practical and deterministic. It wasn't the sort of high-level policy stuff. It actually targeted very specific objectives. And we're seeing that emergence, right? Now, my challenge to you is that, there's the danger that people think AI is going to solve everything, right? So if your company is not, all you need to do is find the right AI, plug it in, and the AI will figure out everything, right? Deep learning will come, AI will come, and it will solve all the problems. What's your thoughts on that?
Junk in, junk out.
Agreed. Totally.
So it's effectively, it's just a piece of technology. And it's a piece of technology where we have to have rules in place, but also we have to put the right information in it for it to give us the right stuff out. The beautiful thing about AI, it can ingest significant amounts of data, run correlations, spit out information in a millisecond that I probably would not have been able to do. So I can do PowerPoint presentations easier, quicker. But it's all about what you put into it. And that holds true for every other technology system that we have right now. right? We had a lot of financial services institutions go down a data journey, set up data centers, data teams, and buy large cloud systems from big tech companies. And like the previous speaker said, you spend so much money, and yet you look at what you've got out of it. It's because you haven't thought through where your winning advantage actually is going to come from. You have to build business models. You have to be deliberate about what you do from day one, not figure it out along the way. So AI is great. I love it. I have a chatbot that I've been training called Cora, and she's a banking expert. I can ask Cora anything today, and she'll tell me anything that has to do with banking and payments. It's that easy, it's that simple, but I've had to train her within certain parameters. If I ask Cora right now about rugby, she'll tell me she doesn't know anything about rugby, and I probably should go to the web and check what's happening with rugby. So it's the same thing when it comes to AI, even at a large scale. And we have to protect the people that are going to be using, or rather on the last mile of these AI innovations, etc. I always say we don't digitize for robots, we digitize for human beings. And there are certain things you cannot digitize. You cannot digitize laughter. You cannot digitize joy. You cannot digitize serendipity. There are certain things that you just cannot digitize. So we need to understand that as professionals in the room today, when we embark on these large digital transformation and journeys. And AI, for me, is just one of those quivers we have in our arsenal.
Yeah, I love what you're saying. I mean, you know, technology is incredible, right? And I would love a time when, and I'm honestly saying this, I would love a time when each person has a large language module of their own entirely, right? That is able to help them with their journey through life. But it's a tool, right? It does come down to the intent. If you choose an intent that is a flawed intent, or if you choose an intent that is not fully, you know, like I prefer value creation over value extraction, and AI will take you on the path of value extraction, right? Because that's what you've set it on that journey. But it's so important to be able to get the algorithm right, right? It's so important to actually know what you want. Because, you know, you mentioned like serendipity and these things. I would argue the entire Maslow hierarchy does not sit in the AI space. That sits in the physical world, and what we build is for people, right? So as irrational as people might be, if none of that matters, that is what people are. Loving the conversation. I'm just going to add, I mean, I think, you know, from a trends point of view, we're going through incredible geopolitical shifts at the moment, right? I think it is, and it's always, you know, we always want to think that the age that we're in is the most important age ever, more important than our parents' age, and our children could never have possibly understood how hard we had it and what amazing things we did to the world. But there does seem to be something fundamental happening at the moment. We're moving from a unipolar world to a multipolar world. We are seeing a situation that hasn't happened since the Dutch East India Company, where corporations have become so large, they are spanning across entire civilizations at the moment. Right? So the platforms we talk about are actually subservient to the platforms that are already there. And those big companies are predominantly the US and China at the moment. So my other big dream is that Africa comes up with its super cloud, hyperscaled environment. Right? Because I think it has the potential to have something like that, considering, you know, the way it is in the growth path. But moving on. You know, I'm confused about the term neobank, right?
You did say yesterday. You did say.
So how do the neobanks lift the bar? But first, you know, what do you think? What's a neobank, right? And then, how do they lift the bar, and for who? I mean, you know, what do we mean by lift the bar?
All right, cool. So yesterday after our chat, I actually asked Cora. So I'm going to play something. I asked Cora, what is a neobank? Let me just do this. A neobank. So effectively, I go into my WhatsApp, and I speak to Cora. I say to her, Cora, I'm going for a talk right now. What are the banking trends? And she sort of talks to me in the car. I didn't do that, guys. Trust me.
I hope Cora's not giving you likes on Facebook, Rob.
She's not there yet. She's not there yet. So I say to Cora, Are neobanks scalable? Okay, I asked this before. What is a neobank? A neobank is a type of digital bank that operates exclusively online without traditional physical branch networks. Neobanks typically offer services like checking and savings accounts, payment and money transfer services, and loans, often with user-friendly digital interfaces and lower fees than traditional banks. That's what Cora says a neobank is.
Please tell Cora I said thank you. We appreciate it.
I'll tell Cora.
That's great, but now I need Chipo to give me your side as well, right? How do you think the neobanks lift the bar, change the game?
So if I think about neobanks, and I've been on both sides, on the fintech, neobank, and on the banking side, neobanks essentially capitalize on traditional banking deficiencies. That is essentially what neobanks do, and that is how they come up, right? They are user-friendly, they are digital only, they are supposedly transparent in the fees that they charge, and they're able to offer what traditional institutions used to offer through a handset or a phone, and it's digital only. So if you think about the opening of accounts, previously you would carry your ID, go with your parents or something, go to a bank branch, and it was such an onerous process. Now digital banks allow you to do it in under 3-5 minutes, right? Onboarding journeys now are literally under 6 seconds. That's the global standard. So this is what effectively neobanks do. How do they lift the lid? They lift the lid because they introduce or induce something in an industry that drives innovation and competition, right? I am all for neobanks, but also when you see what has happened to neobanks, particularly in the last 4 or 5 years, and you look at the darlings of neobanks, look at Revolut, look at Monzo, look at Starling, etc. And these are the guys that started the journey around being neobanks. They had lots of funding injected into them. They literally were the blue-eyed boys in the room as it relates to neobanks. Most of them struggle. They struggle to make money. They're great at the user interface and offering sleek experiences and onboarding and all that stuff. But I always say the conversations go one of 2 ways. In a neobank, people sitting around the table will say, let's go for a sleek experience, and yes, we'll deal with compliance and protection of the customer at a very basic level. If you're sitting in a bank won't mind adding one more step that presents itself as friction as long as they're protecting the customer and forego experience. So it's a delicate balance between experience and protection. And that's always the biggest question when it comes to any of these experiences, right? So do I think neobanks are great? Yes. Do I think they're good for innovation? Yes. Do I think all of them are going to scale? No. Would I invest in your neobank? To some extent, yes, but at some point I'm going to tell them, you want to be part of the big boys club, you have to behave like the big boys. So if you want to be part of the broader financial services institution, you have to comply. You have to have your compliance systems in place. You have to have your systems up to par. We should be able to come in and run an audit and find that you tick all the boxes, you dot the I's and you cross the T's. So it's a double-edged sword when it comes to neobanks for me. And for us, from a Nedbank perspective, we think it's important. We've tried to dabble. I'm not going to say neobanks because we haven't, but we've dabbled in platforms which is close enough to a neobank. So we've got our traditional banking app, and then we've got Avo, for example. And it gives us the best of both worlds. And we continue to explore what other platforms we can spin out to be able to cater for LSM 1 to 10 across the different periods which they need to do banking, payments, etc., and not just offer the basic stuff for the traditional guys, but also offer that experience that opens up the world to the younger generation as well.
Again, I'm highly in agreement. I'd like to bring in the idea that neobanks and fintechs are catalysts for change, right? There's this concept the economists call path dependence, that when you get to an equilibrium state, you are in that equilibrium state, and it takes friction, it takes effort, it takes loss to be able to move from that equilibrium state to another equilibrium state. Physicists will see this in a similar way in terms of changing the polarity of a magnet. You've got to introduce energy, you've got to repolarize the magnet to be able to flip its polarity around. But the question I find or the interesting part around that is what brings about this? And we typically want to think of disruption as a negative, dangerous process or a competitive attack, right? But it's not necessarily just that. Disruption is also the ability to agitate the system, and like the sort of Hubble telescope to the Webb telescope, it brings greater clarity and precision to the attention of the incumbents, and it catalyzes that energy for the change from one equilibrium to the next. Now in South Africa, our equilibrium is we have a certain economic system, we have a lot of banked but underbanking population, right? And if we tie the pieces together, if we have a vision that says, how do we bring that all together? This is perhaps one of the greatest catalysts to be able to pull that together. Yeah. So, I mean, the short of it is, banks don't exist in isolation. They need neobanks, they need fintechs, they need telcos as well. That ecosystem has to come together, and that agitation comes from somewhere, right? Yeah. Yeah. Then, if we can go to another one of the questions. So, we know the mobile phone is incredibly important. It's the kind of device that's going to be sitting around for some time. I know we spoke about the future, and there might be other form factors and things like that happen. But the idea of, let's use an abused term, the democratization of information and all of this that is sitting in the hands of consumers and businesses and the like. So what do you think can be done to make mobile payments more accessible and more seamless in terms of that path, that path towards democratization?
Cool, great question. So a couple of things come to mind. Seamless integration into day-to-day sort of platforms, right? And I did touch on embedded finance, etc. So I think that's important for us to embed digital and payment capabilities at the point at which the customer needs it, because it's going to drive usage, it's going to drive adoption. The more comfortable people are, then the more they definitely are going to use it. Second one for me is, I think about IoTs, and I think particularly about wearables. I don't know how many of you have got use your Apple Pay, Samsung Pay, Google Pay, etc. I hardly ever touch my bank card anymore. Why? Because this thing allows me to do pretty much everything I need to do. And I get stressed when I don't charge my watch, because it's such an important part of who I am. So I think that having simple things like that effectively reduce friction, it's something that I can trust, it's something that I can feel I'm in control of, is definitely going to drive mobile payments. The other one that's really important, and I think about loyalty and rewards. Some of you that study psychology like me, positive reinforcement, negative reinforcement. I need to drive the right behavior. I think loyalty and rewards are a lever that any business within financial services can use to drive the right behavior. And we see a lot of this stuff going on around anyway. So if I want you to drive mobile payments, I want to get you to drive digital behavior, I'm going to use the loyalty and rewards to be able to drive that behavior. And give me the loyalty and rewards that I want. So I've got a bugbear with some loyalty and rewards programs. They'll say to me, Chipo, it's your birthday, you can go get a free cup of coffee at Kauai or Seattle. I don't drink coffee, so you've missed the mark. I actually don't care about coffee. Give me the rewards that I want. Give me something I can convert, something that I can use that is meaningful to me to drive the right behavior. And then I think for me at a macro scale, you spoke about India and how sort of India developed the UPI, which is their version of PayShap. Today in South Africa, we've got PayShap. But for me, some things that we can learn, particularly within the South African industry, is how that was done. And that, for me, speaks to standards and regulation in this way. Digital ID is important to drive mobile payments. We don't have a functional digital ID in South Africa today. That is a big problem for anybody in banking, in payments, in fintech, anybody that is trying to facilitate any form of payment. Because we all have to first solve for KYC. We have to then put systems and processes in place to vet. And what that does is it's a burden on banks, neobanks, fintechs, retailers to do that. And yet in other countries, you find that digital ID is essentially a bedrock. The second thing we need to do is, when I speak about standards, think about QR codes, for example. One of the easiest ways to make a payment, and probably one of the most cost-effective ways to make a payment. We don't have a national QR code in South Africa. We've been talking about standards for a very long time now, but we don't have one. And we always look to how WeChat made it, etc. But that's because there were standards that were put in place from the day dot. We don't have that. We have too much of a free market, and then we've got too many cowboys in the space, and therefore what that does is it doesn't do well for the customer at the end of the day, right? If I was government, and I'm not, if I was government or I was a regulator, I would regulate. Guys, we've got PayShop coming into the industry. This is what we need to have as a very basic level. We need to make sure digital ID is functioning. We need to make sure that the cost of data, cost of cell phones, etc., is accessible to everybody. We have to make sure that our pricing is pegged at X. We have to agree as an industry. We cannot have different decisions being left to different players in the industry. I'm running a business. I'm going to maximize profits. And I'm going to sell as close to the fire as possible. But does that do well for financial inclusion? No. Does that do well for driving mobile payments? No, it doesn't. It's controversial, but those are things that we need to have in place to be able to drive mobile banking and mobile payments in South Africa today.
Yeah, I mean, it's such an important thing. I mean, you've mentioned two countries, right? You've mentioned China and India. Both of them have unlocked the potential of their markets, right? You know, China in the 1980s made a clear statement that they were going to join the rest of the world. India as well, in the 1980s, recognized that their system of over-licensing and over-bureaucratizing the market was actually encumbering the market. So they went on a specific journey they called it the removal of the license Raj. But for both, it was recognizing that the potential comes from the market. But to do this, government needs to be very clear and specific. Its vision, and both countries have a one India, India One, and a China, vision, right? And both very carefully set the guardrail so there wasn't wasted effort on other sides of this. So companies were not arbitrarily going all over the place. And it is so important because when you do this, you actually see, when they come from entirely different political dispositions, entirely different ways of doing things, but both did the same thing. Very strong leadership. When the biometric system in India was put in place, it wasn't let's talk about it for the next 15 years and try to pacify everyone in the market with the appropriate biometric system. It was considered undoable at the time, right? It's a 1.4 billion person biometric system. 10 fingerprints, 2 retinal scans. It is online, it is available. It was considered undoable by the experts in the field at the time, right? But what the government said was, this is where we're going because this is how we address inclusion, corruption, illiteracy, proof of life. We have to have a biometric system. And then the instruction was, this is where we're going. If you want to have a bank license in India, you're going to provide an Aadhaar number to your customers. China was the same with QR codes, right? Now, where I'm getting to this is that collaboration is not just market collaboration. We spoke earlier about the the need for fintechs and banks and telcos and all of that to work. But that comes under a regulatory framework, a policy framework. We need the policymakers and the regulators to also come together with a common vision and understanding. One data policy, one cloud policy, one vision for the country. It is so important because this is the turning, I think this is the point, the inflection point for countries that are going to succeed in the digital space and the ones that are going to sort of pull behind, right, and be recipients of what the rest of the world passes on.
Yeah, true.
I think in terms of, I also want to just add, it is so important for that first mile, that customer piece, to be seamless, right? It can't be a challenge. And I mentioned this at the beginning. We can't have this thing where the customer is expected to do the work, right? That just doesn't make sense, right? I love my bank, but there are 18 options to make a payment. 18.
Don't tell us which bank that is.
I'm not, right? Right? And I still love my bank. I still love my bank. They give me unbelievable stuff, and I'm upper middle income, so I get all sorts of loyalty and all of those things, which I probably don't deserve. But if you are my bank, I didn't really mean that. But 18 options. Why should I know? I want to know how much, to who, when. The rest should be sorted, right? It's incredibly frustrating to believe that I've got to do the algorithm on my side to choose between the apps or to choose between the functions. So just bringing, and obviously, just to put a peg on it, there's always talk about pricing and that payments is going to zero. I've got to do the official Basel thing as well. It is a factor of the market. It is a factor of competition, right? And we're seeing that happen. Right? It happens. It will get to the place that it needs to get to. But
payments are not a zero-sum game.
Payments are not a zero-sum game.
They're not a zero-sum game.
Yeah.
We're just going to create new models. As long as people need to exchange value and in the form of money or any digital currencies, etc., there's going to be a premium that's going to be attached to an activity, etc. So it's not a zero-sum game. I think what's changing is that business models or financial models are not based on interchange like they were before, right? And then when you think about things like account-to-account payments that we're experiencing now and sort of that decrease in card network, and if you look at South Africa, a heavily card-penetrated market, and you've got account-to-account payments, it changes the business model. It just means we have to think differently about where and how we make money, but it's definitely not a zero-sum game.
I totally agree. I mean, I'm reading this book at the moment, really fascinating book that talks about economic fallacies, right? And one of the economic fallacies is the zero-sum game economic fallacy. So I can go far back in the past that I can't be held accountable. There was a point in the Czech environment where there was an interchange. It was scrapped because the twos and fros led to everyone paying each other pretty much the same price. So it equated to zero. And so the fee was scrapped. But that doesn't make sense because work is done in printing checks. Value has to come from somewhere to pay for all of that. Right? And this is where it gets important. Now, if that value is strategic value, if it is amortized over 30 or 40 years, if it leads to new markets, that's fine. But it is still a value in, value out game. Right? There's Ronald Reagan once said, there ain't no such thing as a free lunch. No. Right? And that is true in business as well. So, the future of mobile payments. Right, the whole thing. Where do you think it's going, right? And I know we spoke. I see the mobile phone as almost an end state at this point, and you see it, the world evolving. And we both have children who are sort of educating us at the moment.
Yeah. So maybe let me start there. Augmented reality. So I shared this with Kumaran yesterday. I said, any child that's under the age of 10 has a second life, has got multiple lives right now. You see them walking around your house, but they've got a second life. And in that second life, they perform adult functions in a world that we don't think about because it doesn't exist in the physical world. They are buying, they are trading, they are investing, they are doing all sorts of things. The metaverse is already here. In banking and financial services, we talk about it like something, it's like you see a wave, you're by the beach, and you keep seeing this wave coming, and it's getting bigger and bigger. It's not that. It's already been here, and it's been here for a very, very long time. So when I think about my children and how comfortable they are in this augmented reality or in the metaverse, whatever you want to call it, I think to myself, I don't think this is going to be the be-all, end-all of mobile banking or mobile payments, right? The only reason for me why this gadget is so important is because it connects me to everybody else. It connects me at a personal level, it connects me at a work level, etc. But if you're able to take that and put it in a different space, I think naturally human beings are going to gravitate towards that. So when I think about mobile payments and mobile banking, there's something to be said around augmented reality and payment capabilities that we embed in those virtual worlds and how we embed them. And we need to put rules in place to protect, etc., cyberbullying, whatever else you want to call it. But I think that is going to come. And as people become more comfortable in this world and in this space, they will become more alert, and they'll be able to pick out certain signals, etc., and with machine learning, use it to then protect me in the metaverse. So I think we are going to see, and we're already having conversations with your Facebook, your Meta is now called Meta, X, YouTube, etc., because they're coming to us and they're saying, how do we embed payment capabilities, right, into these spaces? How do we deal with audiences that banks typically don't bank, right? There was a comment from the previous speaker that spoke about SME banking being attractive and being lucrative. Of course it is, right? But generally banks don't look at those guys, right? So I think there's something to be done there. There's a lot of work to be done there. There's a lot of work to be done in cross-border remittance. I think despite everything that we are seeing and everything that's happening, the world hasn't solved that. And because we haven't solved cross-border remittance, you haven't been able to put global standards around currency conversion, around interoperability across different platforms, termination points or collection points for funds for people that actually need them. There's always going to be always going to be a thorn in our side from a financial services industry. It doesn't matter who it is that's playing in that space. But also invisible payments and invisible banking, right? Where banking and payments particularly are going to be more intuitive, they're going to be seamless. It's nothing you think about. And to think about it, we're already there. When you book an Uber, you don't think, oh, I have to pay now. It's literally 2 clicks, you select the car, and you pay, and then you're done. And you're gonna trust that the Uber is on its way, and it's coming to fetch you, or you're gonna schedule it. So this world of invisible payments, I think is going to be extremely important, driven by APIs, driven by embedded finance. And whether you embed this in healthcare, in lending, etc., I think we're going to see a whole lot of that also coming to the fore. So the future is exciting for me as it relates to mobile banking and mobile payments. And it's definitely something that we are looking forward to and something that we're actively engaging on in terms of building new business models, driving new conversations, even around regulation. In our country, how do we regulate some of these new business models and partnerships that we have that are cropping up?
Yeah, I mean, I totally agree with you. I mean, the things that we think of. So just a question: how many people here have actually played around in the metaverse? Who's been to a virtual museum or walked around? Okay, who walked around a city or seen things like that, or done things like that, right? It is going to be incredible, right? If you think of one simple thing, just like training, right? Education, right? These things are phenomenal, right? It doesn't take away the fact that we live in the physical world and you have to eat and sleep and do all of those things in the physical world, but it is inarguably going to change things. More importantly, as Chipo said, our kids intuitively adopt this stuff, right? I watched my daughter as a 3-year-old walk up to our TV and do that in front of the TV, right? And I asked her, honey, what are you doing? She says, I wanted to change. because it was intuitive. That's how the iPad, that's how things should work. The idea of picking up a device and going and clicking on it, it seemed bizarre to her, right? And it is bizarre, right? I want to bring in something you've said, you know, and we're getting to the closing part of this now, and this is for the people around the room as well, is, you know, scale increases, both at the large scale and at the small scale, right? Like we go from hub to web, and that increases. We get more precision, we get more depth, more clarity, our business models become more refined. So one of the things that fascinates me is that when we look at payments, which is my particular area of focus, we talk about rands and cents, right? But yet, and I'm talking about it because you mentioned the IoT, right? So my world, my family's world, in 10 years' time, might be 100 chips in my house doing 100 million micro transactions that I have given them agency over. Right? We don't at this moment in time actually economically understand how you make a payment below a certain value. Choose a rand, right? So what if I had to say, how do you do a payment of 1/100th of a cent? And it might seem ridiculous, right? But at the moment on YouTube, there's an 8-year-old kid who unboxes toys and made something like $60 million last year. Now, the way the model is done, the way the payment is done, is it's done in aggregation. That's not what we like in payments. And it's not good for accounting systems either. We don't want to aggregate things into these bulk things after the fact, right? General accounting principle says you should be doing things as they happen. So how do you do this 1/10 millionth of a cent payment, right? Because the world is going towards that. If there's a world bigger than the payments world, and I come from this arrogant space in payments where we used to tell regulators and businesses, don't mess with us, right? We turn over the GDP of the country every 2.5 days, right? That's what big shots we are, right? People asked me as a PASA counselor once, what's your liability insurance? I said, you ain't got that much money, right? But the IoT world is far bigger than that, right? It is also a standardized world. It has all of the elements, security, actuation, information, and we don't talk to that environment very much. It is coming. And I think that is part of the future of where this goes to, right? Just like in an email, you can send one character in an email, and you can send a 50 meg file if your IT administrator allows it, right? I think payments is going to evolve to the entire quantum of financial movements, and there will be business cases that clever businesses will figure out in that space. Just like YouTube figured out how to make money by letting people watch videos, right? I think there's clever business people that will start figuring out, you know what, there's 1 billion people who are going to give me 1/10 of a cent.
It's already happening.
Yeah.
It actually is already happening. If you ask any of these YouTubers, etc., and we've been watching the growth of the gig economy, social commerce gig economy, and Africa is poised to harness the bulk of the gig economy. And that's so, which means we're going to drive social commerce. So if you look at that, it's micropayments. It's 10 cents
100%.
multiplied by 10 million eyeballs, and the person gets paid. It's already happening. And I mean, I think about the famous example that was used, easy equities. When you wanted to invest, you thought about, geez, I need to save at least 1,000 rand, whatever. Now you can invest as little as 10 rand, whatever else you have. And that's already happening in our world for us as adults. But for kids, micropayments, micro-subscription, all that stuff is already happening right now. And they've already created a system and rules to facilitate that outside of formal banking environments. They just need a store value where the funds can then be deposited, and then I can access the funds to then buy in the next PlayStation and do whatever else. But that whole transaction leg is already happening, and it's not within our purview. And it would be remiss for us to think that we're going to step in one day and then begin to regulate something we didn't start or something we were not part of.
Like the taxi industry.
It's going to self-regulate, and we just have to then support it and make sure that people are protected, data is protected, funds are protected, and do what we do as large financial services institutions or players in the industry.
My closing comment is there's 1.1 billion people in Africa. If you look at what's happening in the world, it's all a play on large numbers. Large numbers give you better data, more data points. It gives you better statistical significance. It allows you to create more value because you're working with many, many more entities. I would love to see that Africa is able to harness that value rather than let it trickle out. It's 1.1 billion. On the global stage, China is 1.4 billion. India is 1.4 billion. The United States plus the rest of the G7 countries come to just under $1 billion. Right? That's what's I think the play in the world at the moment. And it all comes down, and that 1 billion, it's not 1 billion rocks or 1 billion computers or 1 billion, it's people. Right? There is no other real creator of economic value, ultimately, if we think about why we do all of these things, than people. I'm going to stop there. Chipo, your last words.
I think you've said it. Thank you to everybody. Thank you for paying attention and listening to us. I'm not sure if there's questions or anything, but thanks to the organizing team as well. Thank you very much.
Are there any questions? And you're more than welcome. You can ask me the question. I'm going to say something. There's an economist, a very respected economist, who said back in the 1990s he doesn't see a role for the internet in the world, and also didn't understand how anyone could see value in, or couldn't see what anything under $1, how that could add value, right? Why would we want to create systems that deal with under $1? But I won't embarrass the person by saying their name.
He's probably fired.
No, he's a big economist.
Yeah, good morning. I'm Makhatumil from MTN. I mean, the out of what you've shared, right? There seems to be two, let me call it hubs, right? It can be regulators, it can be government, but in a lot of these economies, there's a potential for ecosystems to be the drivers, right? And how do you create those ecosystems? I mean, do you guys have any thoughts on that? Because we've tried as a telco in certain pockets, and you know we talk about a telco, but there's different entities that live within there. But how do you see as a platform or a mechanism to create these ecosystems? For example, you spoke about Chipo, you spoke about digital IDs, right? Because to do that, you need a certain ecosystem that can influence legislation for that to happen, or even outside of legislation where it can be an accepted mechanism between a certain ecosystem or a community. How do you see that happening, and have you seen other examples around the world where that is feasible?
Do you want me to go?
Yeah, so let me give it a stab, and probably Kumaran will come in. And this is something that Kumaran also touched on. So if I take your example around a digital ID, for example, yes, it's a platform in and of itself of which we can build capabilities and products and services on top of it. But that in itself is driven by government, is driven by a regulator for it to be available to the market at standards that are acceptable for everybody. So there's one leg to look at it. We have to, at a political level, engage our government and then our regulator to say, this is what we need as players within the financial services institution for us to drive not just scale, but to drive financial inclusion, drive socioeconomic development, and effectively grow businesses. And digital ID being just one of those things that we need to then put in place. What we then need to do, probably a third layer there that speaks to financial services institutions, telcos, retailers, and anybody that is facilitating any form of movement of value, is we need to be able to sit around the table and have mature conversations around what is good for this country. But that should come from the top. Because we all have got different, in South Africa, the difficulty is you don't have strong public-private collaboration. That is a broken layer for us. That's why it's difficult to drive some of these things. In those other countries where they've got large ecosystems, large platforms, is because that collaboration is intact, is in place, and you've got a government that drives one vision, one agenda, one South Africa, and says this is what we need to do, and we all sort of drive towards it. We've got versions of it in South Africa, but I don't think it's got the credence and the elevation that it needs to be able to bring everybody around the table, and in some instances force people to do what is right. That for me is something we need to deal with. Kumaran, I'm sure you've got quite a bit to say about it. I'm trading cautiously here.
Yeah, I've got very strong views on this, and very happy that we also talk offline as well. You know, it comes down to national vision. So the role of government is to represent what is to do what is good for its people, right? Whether you're a communist government, whether you're a democratic government, none of that matters, right? It is ultimately, and in my mind, in my understanding of political theory, it all comes down to protecting family units, right? Because that's past, present, and future. And if you do that as a government, then you're doing the right thing. But that requires work, right? It requires collaboration. I was asked when my MD first joined BASA, she asked me a very peculiar question. She said, Kumaran, what do you know about the Freedom Charter? Right? It was a very peculiar question, right? Because I'm a payments person, right? So I kind of knew about it academically. But then, because it was my managing director who asked me, I went the entire weekend and I read everything I could possibly read about the Freedom Charter, trying to get to the nuances of it. And what is fascinating about it is that a group of people with probably everything you can imagine against them were able to come up with this very high level, this very majestic vision for the country, which didn't serve them at the time, right? It wasn't something that could be implemented in the short term. But they did this with a lot more obstacles than what we have in front of us today. A lot more obstacles, right? We don't have to worry about being arrested for sending an email, right? And the question then comes about is, how do we create that kind of work, right? How do we create something that is meaningful for South Africa? We've seen it. It is evident. Singapore, the Nordic countries, India, China, Rwanda, right, are all coming together under national vision. India and China are rising because their national visions were strong in the 1980s, and we are seeing the manifestation of China's domestic construction projects within China now having created the capability and now rolling out. So when we come to these things, whether it's digital identity, and I think digital identity is incredibly important, but look at the example of India. You've got to do the referendum, understand what is wanted, not getting into whether it's DTIC, whether it's finance, whether it's credit, whether it's this. It's what is wanted, what is needed to drive prosperity of families in South Africa. That factory, when you do that domestic, physical, and digital infrastructure, when that gets put in place, because we won't solve it today. Everyone's lives won't change by Tuesday. But we can make sure Chipo's child, my child, your children are actually not reversing or having to pay or having to reverse engineer what the mistakes of our time, but they have something positive to work with. So short answer is it comes to vision. It can be done. It is being done in many countries. These are leading us at the moment. It's incredible to think that India might be on the same growth path as Singapore, and if you extrapolate India's numbers to Singapore's numbers, that is an incredible journey, right? So can digital identity be done? Yes. But the what comes from the state, not from companies. I firmly reject the proposition that business can do this, the role of the state. Business is there for target markets and to do shareholder returns. We do it ethically, we do it in good ways, but business is not tasked with solving for 100% of the population. We need the what to be described, and then, importantly, experiment. Create sandboxes, do things, test various theories, learn, fail, learn from the next thing, and move on. That's happening all over Africa, right? There are sandbox experiments in embedded finance, in all sorts of things happening all over Africa. But don't do one at a time. Do 50, do 100. Start building the theory. Because it's not as if economists like the one I told you know what the answer is. There's no textbook that's going to tell you this is what Africa needs. It's being written right now. Right? This is the experience that's happening. So I'm hoping that I answered you. I can give you more specific direct answers. It is about collaboration. If you're going to have a digital identity that is fragmented into 40 proprietary ownerships, then that doesn't work.
Good morning. My name is Osahan Akbata, and I work at EcoBank, a Pan-African bank in 33 African countries. I like what you said about payments not being a zero-sum game. But I want to ask you what your thoughts are on this particular topic because of what regulators do. And I'm going to use an example of Nigeria, where I live. In Nigeria, the regulators push the pricing of interbank funds transfers down to something in the range of 5 to 7 cents at maximum. And in most of the other markets in which we are, I think it's something in the range of $1 or $2 for an interbank funds transfer. They also reduced the pricing of card issuance. So you can only charge about $1.25 for any card, be it a gold, platinum, classic, it's the same price. That does very well for volumes. And I also understand why they would do something like that, because I've met people who cannot even pay that $1.25 for a card. However, on the other side, there are costs involved with providing this service. We just saw something earlier this year where there was a Naira redesign policy, and it was designed to make sure that people didn't have so much physical cash. In other words, if you put in a certain amount, you only got a fraction back in new notes. And people had to transact electronically, and we saw doubling of the numbers of successful transactions, probably tripling to 5 times number of transactions that tried because a lot failed during the period where there was no cash. So this is because obviously there's not enough infrastructure to handle the volume of payments. And the person who has to build that infrastructure has to invest money to do so. But at the same time, you want the pricing to be low enough for the masses to be able to access the funds transfers. So considering what the country did and is continuing to do, and I'm actually hearing that they're trying to get it to zero. They don't want to see payments as a revenue source for banks, for example. How does one balance between that need and the need of, profitability and actually being able to cover costs and invest in infrastructure? Any thoughts on that?
Yeah, Chipo, I can go, right? So first thing is I'll say have a look at Google, right? It doesn't charge you to do a search, right? That's not what zero means, right? Where your revenues come, well, I suppose the biggest example, and I feel strongly about this, is the idea of value creation versus value extraction, right? The idea of there being a certain amount of personal disposable income, or that money is like energy, cannot be created or destroyed, is fundamentally flawed. Right? Mo Ibrahim proved this. Right? Celtel came into Africa. The major telcos refused to invest in Africa because people in Africa are too poor. So who would pay for the cell towers? Who would pay for the bandwidth? Who would pay for the airtime? Mo Ibrahim challenged this notion and said, no, that's not how economics works. Right? The world didn't come about with money sitting somewhere. Money is created. Right? As banks, we do this daily. Right? So if you actually create, and there's a guy named Clayton Christensen who's written this beautiful book called The Prosperity Paradox. It's stunning because it tells you how economic value is created. If you put down, but you've got to have long-term vision, you've got to be able to say, I'm putting down this infrastructure. There is a push and pull effect that creates other industries. Money is created, value is created. It creates the system that allowed Mo Ibrahim to sell his share in Celtel for $3.4 billion real dollars, right? Which never existed before, right? Now, I think the same thing is true of Africa, and I think it's more true of Africa than anywhere else in the world, because Africa is not coming from a place where it is mobile almost first, right? It doesn't need to do checks and cards and you name it, right? In fact, there's countries that will probably go to Chipo's metaverse space seamlessly, right? So I think it's really about how you see your profits. I mean, I get asked lots by international firms wanting to come and invest in South Africa. Should we invest in South Africa? My answer is, if you're in it for 5 years, then don't, right? Because all it's going to be is value extraction. But if you're in it to actually build up the base, to empower people, to start looking at the next generation and saying, there's billions to be made. Let's not kid ourselves. We're capitalists here. Right? There's billions to be made. But if you're going to do it for the next generation, right, if you know that it's not about, like Warren Buffett used to say, if there's blood on the streets, buy, right? That's not what we want to do, right? Because it's unsustainable. Right? So I think there's a huge amount of value. Google, Facebook and the like have proven that. How can they be worth this amount of money and charge nothing? Facebook DM has a payments model that doesn't charge anything, right? So the value is there. It's just the transition from direct annuity or direct transactional charges to something that is more sustainable. And a simple example is South Africa doesn't do much float. Consequently, we don't have much float interest. This started disappearing around 2000, where we made real-time available to corporates, we made real-time available in the retail market, and everything, except for a couple of like reverse transactions, there is no float in the system. Not everything is backdated to the action date. But a simple example is, if the social grant deposits were done 2 days before the social grant payout was made, that allows the industry to do what it is incredibly good at doing, which is leveraging interest. And that, in turn, doesn't attack the capital, which allows this wonderful transition, because when I give you a 100 Rand note, there's no little scissors that comes out and cuts a piece of the 100 Rand. You get the full 100 Rand note. And that's the challenge with transactional income. So it is possible. There's lots of models to do it. I think banks will find those models, right? But it's not a straightforward, simple vertical income statement, that says replace this value with this value. It has to become more ecosystem thinking. And Chipo's partnerships, right? Get involved in value-adding partnerships.
Yeah, I was going to say that as well. I think partnerships become extremely important. It's also probably in the short term a game of negotiation on the potential pool of value for anybody that's involved, whether it's printing of the card, distribution of the card, in your example, etc. Because that's all we have, right? And if I think about alternative payment methods that have come into our market, we have that, and we are leapfrogging from an Africa perspective. So yes, are cards necessary? Globally, yes, because they're widely accepted and understood. But if you look on the African continent, you've got more wallets, you've got other alternative payment methods, whether it's real-time payment systems that have come to the fray. And that's why you've got giants such as MasterCard, Visa, and everybody else panicking, because their traditional revenue pools are being disrupted and drastically cannibalized. And that is why they are shifting from, we're not card networks anymore, we're tech companies. If you hear what they've been saying in the last 5 years, we're tech companies, because why? They want to play in that particular transaction because they realize there's a shift and there's a move. And again, on the African continent, we are driving a lot of that economic behavior in those transactions. So how do you then begin to bring that in around the boardroom and begin to unravel other revenue models, because they are there? It's not an interchange, it's not an interbank transfer anymore. It's to sit around the table and say, okay, so maybe as a bank, my CE doesn't understand that we need to invest X amount of money in this because we probably spent money on digitization. But a fintech can probably go out into the free market and get lots of money and come back and print and distribute cards for you. So you have to ask yourself the question, what am I going to hold on to, and what am I going to partner on to get scale and to drive the behavior that we need to drive, but also discovering what these new models actually are. I think there's a whole lot of them. We're sitting on them. We just don't know what they are. And because we've been in banking for a long time, we're not flexible enough to say, I'm willing to forego this traditional revenue item to be able to get this in return. Those are the conversations we should be having right now. And unfortunately, big banks and big incumbents are not designed that way. Because when you go back to your shareholders, when you go back to your board members, you're still reporting on traditional line items in the income statement, etc. So we find ourselves at the cusp of a new era, and we have to have mechanisms in place in the short term, but also have the vision to build for the long term.
Thank you. It's like I'm sure no one's heard of the arguments between the card guys and the mobile guys inside of a bank, right? The cannibalization of revenue argument. This is the world we're in.
It's intense.
Thank you, Chipo.
Thank you.
Thank you, everyone.